Welcome to Fitz Factor, the show where you learn how to master the stock market with Dan Fitzpatrick, the stock market mentor. Dan is a savvy trader. He's featured regularly on Fox Business, CNBC, Investors Business Daily, and SiriusXM Radio. In this podcast, Dan shares his insights on trading, life, and attaining long-term success in the market.
Trading's pretty tough, obviously, and it requires some specific challenges to be overcome. And the main ones, in my view, are these five: emotional control, overtrading, lack of a strategy or plan, and then keeping up with market changes would be the fourth one, and then finally managing risk and uncertainty. So I'll treat those in order. And this first one is going to be on emotional control. I just want to limit my comments on that. Now, trading's emotional for two reasons. It involves money and ego. You don't want to lose money. You want to make money, and you don't want to be wrong. You'd rather be right. That's really what it gets right down to. Now, there have been studies that show this, and this may surprise you, and men, I'm sorry. Men tend to have a harder time in trading than women. We're wired a little bit differently. I would attribute that to testosterone and just kind of the way we've developed as a species. Men have an ego of being right. They're the ones that feel like they need to go out and slay the dragon and make the big money. They want to be the king of the hill. I mean, that's essentially how men are wired, generally speaking. Now, women, again, I'm absolutely generalizing. Women are a little more risk averse. First of all, they're smarter too. Again, generalizing. Women tend to trade less frequently. They make fewer mistakes because they tend to trade less frequently. And then also they're more cautious. They keep an eye on the bottom line. They don't want to lose money. And so over time, women tend to do better at trading. Once again, I'm generalizing. Now, the thing is, men, we're not bound by this, but it's important to know. We all have our characteristics. And as I read this, and I've really studied this stuff, I have definitely fallen into that category of the typical dude. I'm a gunslinger. I would tend to trade really big, take big chances, and then lose my asterisk, and then start all over again and not learn. And so we're going to get past that. Think about it again. With respect to emotional control, what you have to do is first understand what trading actually involves. Like what are the traits? What are the challenges? What are the things that you need in order to be a successful trader? And I'm not talking about making one great trade. I'm talking about over time being successful. And so what trading really involves is experience. Okay. If you're coming right out of the chutes, you're at a huge disadvantage. If trading was easy, everybody would do it, and it wouldn't be called speculation. It would be called winning or money harvesting. It's not. You have to have experience at that. You can't just sit down at the World Series of Poker and expect to drag every pot when you're brand new. Also, aside from experience, you need knowledge. It's not just the number of trades that you make. It's what you learn about the market, what you learn about yourself, and what you learn about the actual act of trading. So it also involves analytical skills. You can't just trade by feel. Some people will say they do. Even some good traders will say they trade by feel. But then if you say, all right, well, tell me what you feel. What do you base your feelings on when you say, oh, I think this stock is ready to go? And frankly, I do that. I trade a lot based on feel. But if you pin me down and say, well, what do you mean? You look at this stock and you're saying that it's ready to go. Then I will start talking about the analytical process that I have that I tend to not really articulate, because what it really gets down to is this. I'll look at a chart, and then 99% of them, you pass on. And if someone were to press you on each one of them and why you're passing, I would just say, well, it doesn't quite have that look. And then I find one that does have that look, and I start to describe it, and it has certain characteristics. And more on that at another time. But generally speaking, these characteristics involve, and I'm generalizing again, is an uptrending stock, a stock that's showing me a series of steps and rallies, in other words, rests and then moves higher than other rests. It's not showing me that it's super, super extended, though actually that's a trade as well. It's just kind of a different trade. It's showing me pullbacks to established support and then breakouts from established resistance that continue to go higher. It's showing me certain volume characteristics. It's showing me certain closing location values within either the daily or the weekly time frame candles. Is it closing near the intraday highs or intra-week highs or not? There are all these different aspects of analysis of a chart pattern and of a company and of a stock. There are all these different aspects that are really important. And when you have those things down, then trading does kind of feel like it's a matter of feel. Okay, so you got to have the analysis down. You got to be able to look at a lot of charts and understand what you're looking at. Also, you have to have good risk management. And that means being able to manage how much you're risking on each trade, looking at it from a risk reward potential. How much are you risking? And then what do you think your potential reward is? And just saying more doesn't quite do the trick. All right. So what you also need is the ability to adapt. Got to be able to do that. Okay. Markets change all the time and you need to as well. Now, if we look at the environment and be mindful, all I'm talking about now is managing your emotions. I'm just talking about managing your emotions. So part of those would be understanding what the environment of trading is and why things can be so emotional. These are some of the issues that you're going to have in trading. Okay, there's infinite variables. There are thousands of tickers. It just goes on and on. I'm not going to go into those right now. Lord knows this would be the longest podcast in the history of man, even longer than one of Joe Rogan's. But if you don't have some set parameters in what you're doing, trading is like playing asteroids. I don't know if you remember that old game, but there's just a constant barrage of floating rocks coming at you, and you got to strike, you got to shoot each one down before it destroys the ship. This is trading. Now, also, there are like almost 2,000 minutes to trade each week. You can make mistakes. You can make money during each of those minutes. All right. So it's a horrible environment for making decisions. Pricing is unpredictable. The market is really not transparent. You don't really know what institutions are doing. You can only surmise that based on what? Your experience, based on your knowledge and applying your experience and knowledge to your analysis. Also, another issue with respect to the environment is who's the sole decision maker? You. This is not trading by committee. You change every day. Your psyche changes every day, and I'll talk about that in a second. So basically, when you really think about it, trading is like the worst environment possible for succeeding. Think about the movie Armageddon and what the asteroid's like. Basically, the worst environment possible. That's trading. Okay, so with respect to the way you are dealing with this environment, it's going to elicit fear, greed, stress, and bad decisions. The most common result is this. You're going to wind up selling at the low and buying at the high. Fear of losing everything versus fear of missing out. And so what you really want to be doing is this. I think you want to focus on two things. First of all, a trading plan. Think it through. What exactly are you doing? If you have a plan, you will find it much easier to master your emotions. You take your emotions out of it because you're essentially just kind of following a checklist. Now, your plan is a template, and I'm not talking about only a specific plan for this trade, though you absolutely do need to have that. You need to have an opinion. You need to have a plan for this specific trade. But your trading approach, that has to have, you have to have a plan for that. Write it down. This is essentially your pre-flight checklist, and it's your map for the flight. I used to fly, have my private pilot's license. I still do. I just don't fly. A pilot has a pre-flight checklist, always goes through the same exact thing. Even though you've been flying for decades, good pilots still go through their pre-flight checklist. That's just to get in the cockpit and ultimately work to getting off the ground. Okay. And then they have a map. Where the heck are they going? They have markers. Well, now it's just GPS. But when I first started, you literally had markers along the way that you triangulated to make sure you were on track. I'm dating myself. And then finally, what's your final destination? Where are you going to land? Okay. So pilots do that. Traders need to do that too. You have to have criteria for selection. Narrow it down. It's important to have lists. A list of stocks that generally meet your criteria. You need a specific setup. Write it down. You need to know what your proper position sizing is, and you never want to lose, you never want to risk and then hence lose more than 1.5 or 2% of your account. I tend to risk a lot less than that. Maybe that puts me in the category of the best type of trader, which is a female trader. I'll take it, baby, all day long. So you need to also have stops for the losses. You have to specifically be able to build failure into your trade. When you have failure built into your trade, that means that you have established and you accept the worst case scenario. You say, I will risk and I will lose. I can lose this amount of money for this trade. Once you know what that max loss is, emotions no longer come into it. It's actually a good trade, no matter which way it goes, because your plan is going to be executed. You'd prefer everyone to be a strong trade, a profitable trade, but losing is a part of trading. And so if this particular trade takes a loss, you're not emotional about it. You say, well, I planned for that. It's all good. Okay. So another way to eliminate, emotion is to have targets for establishing your risk reward. We've already talked about establishing risk. Now, where do I think the stock's going to go? Do I think it has blue sky, or do I think there's a specific resistance level that it's going to have trouble? Now, how about adding or subtracting a position? You need to have that as a part of your plan, a part of your trading methodology. What the heck are you doing? Okay. And you also need to have these criterion for how long am I going to stay in the trade? Am I going to be switching time frames, looking back and forth to a longer time period for a frame of reference for trend, or am I going to be staying super, super tight? Your trade, your decision. This is all the first part of mastering emotion in terms of creating a trading plan. The second part to me is just mindfulness and visualization. If you can see it in your mind, you can hold it in your hand, but you're never going to become anything different than the person you are now unless you've got a vision for who you want to be. It's called personal growth. You'll never trade differently unless you visualize the trader you want to be, and then craft a plan to bridge the gap between where you are now and where you want to be. It doesn't happen on its own. There truly is no such thing as the force. All it is hard work where you're gradually forcing yourself to become the trader you know you need to be. And then pre-market, as far as visualizing, get up in the morning and empty your trunk. Just get rid of all the junk that you would normally take into your trading day. If you're feeling bad about yourself, you're going to be prone to make losing trades. Okay, so get rid of that crap. Get in a trading mindset. Think of yourself as a risk manager. Review your trading approach, your pre-flight checklist. Got to have that next to you on your desk and in your mind. And then you need to remain focused. One thing that helps me when I do it, and it's always to my detriment when I don't, and that is to set timers for staying on track. I'll set an alert for 10 o'clock and also for 10:30. So I keep track of the first hour of the day. That helps me in any quick trades that I have. And it also helps me in managing existing positions. Most of the action is during that first hour, which means the action really tapers off at the end of that first hour. So maybe that's when I want to push away, go grab a meal, grab another cup of coffee, hit the gym, or do whatever else it is that I want to do. Middle part of the day is for doing nothing with respect to trading, maybe doing research. Okay. So in a nutshell, this is the deal. If you can master your emotions, you're set up to succeed. Until you do that, you're just going to be flailing and vulnerable. So my suggestion is go back and listen to what I've said here and see if you can check the box on some of these things that you need to be able to address before you can really be in a position to master your emotions. Getting away from emotional trading is what's going to get you towards consistent profitability and towards becoming that trader that you know you can be. You've got the potential to succeed here. You just need to actually do the things that it takes to get there. I'll see you next time.